Welcome to the Deep Dive. Today, we're diving deep into Robinhood Markets, Inc.,
Oh, yeah, Robinhood.
the online brokerage that's, really become synonymous with kind of this new generation of investors.
Yeah.
So we've got some excerpts here from a value investing analysis,
Okay.
and we're going to unpack all the details
Right.
from, their business model, how they actually make money,
Yeah.
to the management team, their financials, and really try and get a clear picture of,
Right.
would this be a worthwhile investment?
Right.
But first, here's a little something to, kind of pique your interest.
Okay.
Did you know that Robinhood makes a good chunk of their revenue from this practice called payment for order flow?
Payment for order flow.
Yeah, so we're going to break down exactly what that means
Okay.
and why it matters.
Sounds good.
So first, let's demystify a little bit about what Robinhood actually does.
Okay.
At its core, they offer commission-free trading. So that's for stocks, ETFs, options, even cryptocurrency.
Wow, that's a pretty wide range.
Yeah, and they've really made it accessible through, their app, their website.
Yeah, their platform is really user-friendly.
Yeah, exactly. Very user-friendly.
Yeah.
And one thing that they've offered that has been a game changer is this idea of fractional shares.
Okay, so even if you don't have a lot of money to invest, you can still get in on the action.
Yeah, exactly. You can buy, a fraction of a share of, let's say, some really expensive stock.
That's a great feature, especially for, newer investors.
Absolutely. So it opens it up to a lot more people.
Right.
Now, the question is, if they're not charging commissions on trades,
Mm-hmm.
how are they making money?
Yeah, how does that work?
That's where this payment for order flow, or PFOF, comes in.
Okay.
So essentially, when you place a trade on Robinhood,
Mm-hmm.
they route that order to what's called a market maker.
Okay.
Some examples would be Citadel Securities or Virtue Financial.
I've heard of those names, yeah.
Yeah. So these market makers, they actually execute the trade,
Okay.
and they'll pay Robinhood a small fee for sending the order their way.
Interesting. So it's like a referral fee.
Yeah, kind of.
But, does that create any conflicts of interest?
That's been a big debate. So critics of this PFOF practice
Right.
say that, yeah, the market maker might prioritize, their profit
Mm-hmm.
over getting the investor the best possible price.
Yeah, makes sense.
So, that's something to keep in mind.
Definitely. Transparency is key.
Exactly. Transparency is super important.
Right.
Now, this PFOF practice
Mm-hmm.
accounts for a large amount of Robinhood's revenue, like 72.8%.
Wow, that's a big chunk.
Yeah, it is. It's their bread and butter right now.
So they're pretty reliant on that.
Yeah, very reliant on that. But they also have some other ways of making money.
Okay.
So one way is through net interest revenue,
Right.
kind of similar to how a bank would earn interest,
Okay.
from deposits. So they'll lend out customer cash securities
Hmm.
and collect those interest payments.
Makes sense.
They also have a premium subscription service called Robinhood Gold.
Oh, yeah, I've heard of that. What's that about?
Yeah, so that gives you some extra features
Okay.
like margin trading and research reports.
So it's like a more advanced platform.
Exactly. So if you want to get a little bit more, into the nitty-gritty.
Yeah, for more experienced investors.
Exactly. But it's important to note that Robinhood Gold only makes up a small portion of their revenue.
So they're still heavily reliant on that PFOF.
Exactly. It's really the core of their business.
Okay.
They do have, some other things like they dabble in cryptocurrency.
Right.
They have some debit card fees,
Mhm.
some other smaller ventures.
Okay.
But yeah, PFOF is really where they're milking the majority of their money.
Gotcha.
Now, let's talk a little bit about the people behind Robinhood.
All right.
So, the company is led by CEO Vlad Tenev, and you have to give them credit. They really disrupted the brokerage industry.
Yeah, they definitely shook things up.
Yeah, they made it a lot more accessible for people to invest.
Yeah, especially for younger generations.
Exactly. And they've been very aggressive
Oh.
in introducing new products, new features.
Right.
Fractional shares was one.
Mm-hmm.
And they're really focused on growth.
It seems like they're always launching something new.
Yeah, they're constantly innovating. They've even made some strategic acquisitions
Wow.
to kind of expand their reach.
That's ambitious. But has that rapid growth, caused any issues?
It's definitely been a roller coaster ride for them.
Okay.
So they've faced, some regulatory fines
Oh.
for some compliance issues.
Mhm.
They've been criticized for, how they handle options trading.
Right.
And they've had some, let's say, very public customer service struggles.
Oof. Yeah, I've heard about those.
Yeah. So it hasn't been all smooth sailing.
Right. Makes sense. I mean, fast growth often comes with some growing pains.
Absolutely. And there have been some, kind of red flags
Okay.
regarding some of the decisions management has made.
Like what?
So there's been significant insider selling of Hood stock.
Oh, interesting.
Even Kathy Wood's ARCO Investment Management
Wow, even ARK.
has been reducing their holdings.
That's definitely a signal worth watching.
Yeah. And there's also been some, whispers about a lack of transparency in their communication.
About what specifically?
Particularly around their cryptocurrency business
Oh, okay.
and how it relies on kind of a more relaxed regulatory environment.
I see. So some potential risks there if things change.
Exactly, yeah. It's something to definitely keep an eye on.
Gotcha.
So, it's important to evaluate not just the company's financials,
Right.
but also the quality of their leadership.
Yeah. Are they making decisions that are, sustainable for the long term?
Exactly. Are they just chasing short-term growth? These are all really important things to consider.
Yes, definitely.
Now let's get into the numbers and see, how healthy are Robinhood's financials.
Okay, let's dive in.
They have a market cap of $43.67 billion.
That's a pretty hefty number.
Yeah, sounds impressive, but their price-to-earnings ratio
Okay, the PE ratio.
is a bit high, 83.53.
That is quite high.
Yeah, and, this ratio was actually negative at the end of 2022.
Oh, wow. So it swung dramatically.
Yeah, huge swing there. So that's something to, kind of keep in mind.
Definitely a red flag.
Yeah, what's driving that change?
Mm-hmm.
Is it sustainable? We'll have to see. Now, their revenue growth has been pretty impressive,
Okay.
clocking in at 35.74% in the last 12 months.
Okay, so they're growing fast.
Yeah, but when we look at their profit margins,
All right.
the picture gets a bit more, nuanced.
Okay, how so?
So they have a gross profit margin
Mm-hmm.
of 86.46%.
Whoa, that's really high.
It is, right?
Yeah.
But their operating and net profit margins are both around 21%.
Okay, so big difference there.
Yeah, so it's important to remember that a high gross profit margin doesn't tell the whole story.
Right, because it doesn't factor in all their expenses.
Exactly. So we have to look at all three: the gross, the operating, and the net,
Okay.
to really understand, how efficiently are they turning revenue into actual profit
Mm-hmm. Once everything's accounted for.
after all their expenses, right?
All right.
So, we need to see how well they're managing those operating costs.
So like their marketing, technology, salaries, all that.
Exactly. All of that stuff, yeah.
Okay.
Now it's worth noting that they are making efforts to diversify
Okay.
those revenue streams.
So trying to move away from just transaction-based income.
Right, because, with all the uncertainty around PFOF.
Yeah, it's smart to have multiple streams.
Yeah, exactly. Makes them more resilient. Now let's address the elephant in the room.
Okay, what's that?
Robinhood has a history of volatile earnings.
Not so good.
Yeah, and they're carrying a significant amount of debt.
Oh, so even though they have a lot of cash, it might not be sustainable if growth slows down.
Exactly. That's a key concern. So this idea of runway, how long a company can operate with their current cash reserves, becomes really important.
Yeah, especially if their revenue were to drop suddenly.
Yeah, exactly.
Right.
So that was a glimpse into, Robinhood's financial health,
Okay.
some impressive numbers,
Yeah,
but also some, potential red flags.
definitely some things to keep an eye on.
Absolutely. Now, before we move on, I'm curious to hear your thoughts. What are your initial impressions of Robinhood based on what we've discussed so far?
It's always interesting to get those first impressions, right? See what people are thinking.
Yeah, for sure. But before we make any judgments,
Mm-hmm.
we really need to understand, the context.
Yeah,
Where does Robinhood fit into, the whole online brokerage world?
right.
So how's the industry doing overall?
Yeah, what's the big picture?
The industry as a whole is booming.
Okay, so it's not just Robinhood.
No, not at all. It's being fueled by a couple of things.
Like what?
Well, mobile trading has really taken off.
Yeah, everyone's on their phones these days.
Exactly. And there's been this surge in retail investors.
So more everyday people are getting into the market.
Exactly. And technology, of course, just keeps making investing more accessible.
Yeah, it's easier than ever to get started.
And you can see that growth in the numbers.
Okay, what kind of numbers are we talking?
So the electronic brokerage market is projected to reach $18.02 billion
Wow.
by 2028.
Okay.
And it's growing at a rate of 10.7% per year.
So definitely a lot of opportunity there.
Yeah, but with opportunity comes competition.
Right. Makes sense.
So the industry is facing some challenges.
Like what?
Well, there's a lot of regulations, which are costly.
Yeah, compliance can be a headache.
Absolutely. And then there's the constant worry about security and privacy.
Mm-hmm. Yeah, those are big concerns these days.
and the market's getting pretty saturated.
Okay, so lots of players vying for the same customers.
Exactly. So how does Robinhood stand out?
Yeah. How do they differentiate themselves?
Well, they've got really strong brand recognition.
Yeah, especially with younger investors.
Exactly. And remember, they were the first to offer those commission-free trades.
Right, that was a big deal.
Huge. And their platform is, super easy to use.
Yeah, I've heard good things about their app.
Very user-friendly. So those are all major pluses.
Okay, so they've got some strengths, but what about the competition?
Yeah, the competition is fierce.
So who are their main rivals?
Well, you've got the established players like Fidelity, Schwab, E-Trade.
Yeah, those are big names.
They've all adapted, they offer commission-free options now.
So they're not just sitting back and letting Robinhood take over.
No, they're fighting back, investing heavily in their platforms.
Okay, so it's a battle for market share.
Absolutely. So what's the overall sentiment?
You mean are people optimistic about Robinhood?
Yeah, they bullish, bearish, what's the feeling?
Well, the signals are kind of mixed.
Okay, how so?
So the average analyst price target is about $41.25,
Okay.
which suggests maybe there's some downside potential from where the stock is now.
So not everyone's convinced they're going to keep going up?
Right, exactly. Price targets, they're just one piece of the puzzle. And remember, the stock price, it reacts to a lot of different things.
Yeah, news, regulations, market swings,
Exactly. So there's always some uncertainty.
And we can't forget about the short interest.
Okay, what's that?
So that's basically the number of investors who are betting against Robinhood.
So they think the price is going to go down.
Exactly. And that's been increasing.
Interesting.
It reflects some of the concerns, about their reliance on PFOF, those regulatory issues they had in the past.
Okay, so there's definitely some skepticism out there.
Yeah, but then you've got firms like Zacks.
I've heard of Zacks.
So they do investment research,
Okay.
and they give Robinhood a rank 1.
What does that mean?
It means they expect above-average returns.
Oh, wow. So they're optimistic.
Yeah, so it's a mixed bag.
It sounds like it.
It really highlights the uncertainty around growth companies like this.
Yeah. High potential rewards, but also high risk.
Absolutely. Now, let's shift gears a bit and talk about ownership.
Okay.
Who owns Robinhood?
Yeah, who's calling the shots?
A big chunk of their shares are held by institutional investors.
Okay, so big investment firms.
Exactly. Pension funds, mutual funds, that kind of
So is that a good thing or a bad thing?
Well, it's a bit of a double-edged sword.
How so?
On one hand, it shows that these sophisticated investors, they see potential in Robinhood.
Okay.
They're willing to put their money behind it.
What?
But it creates what's called a crowded trade.
Crowded trade? I haven't heard that term before.
So imagine a packed theater,
Okay.
and everyone suddenly decides to leave at the same time.
Oh, chaos.
Exactly. Panic, everyone rushing for the exits.
Right.
It can be similar in the stock market.
If all those institutional investors decide to sell at once,
Yeah, the price could plummet.
makes sense.
That's something to keep in mind.
Definitely.
Now, there's another layer to this ownership thing.
Okay, what's that?
Insider holdings.
So how much stock do the company executives own?
Exactly. And typically it's a good sign if they own a lot.
It shows they believe in the company.
Yeah. Their interests are aligned with the shareholders.
Right.
But Robinhood's case is a bit unusual.
Oh, how so?
So they do have significant insider holding,
Okay.
but they have a really low Fintel insider accumulation score.
Fintel, what's that?
It's a platform that tracks insider buying and selling.
Okay.
And their score basically measures sentiment.
So are insiders buying or selling?
Exactly. And a low score suggests that insiders might be more focused on selling.
That's interesting.
It's not necessarily a deal breaker,
Right.
but it does raise some questions.
Yeah, why are they selling?
Exactly. And to add another wrinkle,
Okay.
the top 25 shareholders in Robinhood, they control 68.33% of the stock.
Wow, that's a lot of power in the hands of a few.
Yeah, it's a pretty concentrated ownership structure.
And what does that mean for, corporate governance?
Well, it raises some concerns
Like what?
about whether those interests are aligned with, smaller investors.
It's important to have checks and balances.
Exactly. Make sure the company's being run for the benefit of everyone.
Makes sense.
So we've covered a lot of ground here.
We have.
But before we get to the conclusion,
Okay.
I want to remind everyone
Yes.
that all the sources we use for this analysis are listed in the description below.
Definitely check those out.
Yeah, do your own research. Dig deeper into Robinhood.
Always a good idea.
Absolutely. We'll be right back with our final thoughts. Okay, so we've covered a lot of ground with Robinhood.
Yeah, we've really gone deep.
Their business, their management, financials, the whole 9 yards. So the big question is, what's the final verdict?
Yeah, is this a stock we should buy, sell, or hold?
Well, they've definitely shaken things up in the online brokerage world.
Oh, for sure. They've become really popular with a lot of younger investors.
Exactly. Those commission-free trades and their user-friendly platform, that's a big draw.
Yeah, and their growth has been impressive, especially in such a short time.
Yeah, but the question is, can they sustain that success?
Right. Can they turn that early momentum into long-term value?
It's a tough one. There's a lot to like about Robinhood.
Yeah, like you said, the innovation, the growth, the fact that they're attracting new investors,
But then you have those concerns we talked about.
the reliance on PFOF, the regulatory issues, the debt,
Right. Those are some serious red flags.
definitely things that investors need to weigh carefully.
It's all about balancing the potential rewards with the potential risks.
Exactly. And it's not a clear-cut case for value investors.
No, it's not. Now, I'm curious, how do you think Robinhood would measure up against, say, Warren Buffett's investing principles?
Oh, that's a great question. Well, Buffett is all about investing in companies with a simple, understandable business.
Right. He likes businesses he can wrap his head around.
And Robinhood's core business is pretty straightforward, so that part checks out.
Okay, so 1 point for Robinhood. What about the management team?
Well, Buffett really values integrity and a good track record.
And we did discuss some concerns about Robinhood's past decisions.
Yeah, those compliance issues, the insider selling, those might raise some eyebrows.
Okay, so maybe not a perfect score on the management front.
And of course, Buffett is obsessed with strong financials.
He wants companies that are making money, right?
Exactly.
Yeah.
He looks for a durable competitive advantage, a healthy balance sheet, consistent profits.
And Robinhood is profitable, but they have a lot of debt and they rely heavily on PFOF.
Right, and Buffett generally prefers companies with a more diversified revenue stream and a conservative approach to debt.
So maybe not a Buffett favorite in terms of financials.
And lastly, there's the question of value.
Buffett's all about finding those undervalued companies with the potential for big returns.
Exactly. And Robinhood's current valuation, well, it's not exactly a screaming bargain.
So it sounds like they might not tick all the boxes for a classic value investor.
Maybe not all of them. Robinhood has potential, but there are some key things to watch.
Those are the things we've been talking about, right?
Exactly. How they handle PFOF, manage their debt, and navigate the regulatory landscape.
Those are going to be crucial factors in their long-term success.
Absolutely.
So for everyone listening, keep an eye on Robinhood.
Do your own research, see how they progress on these key issues.
And remember, investing always involves risk.
Past performance doesn't guarantee future results.
Make sure you understand the risks involved and make decisions that align with your own goals.
And if you're ever unsure, consult with a financial advisor.
And if you enjoyed this deep dive, be sure to subscribe to the Stock Analytics AI YouTube channel for more insightful analysis.
We're always exploring new topics, leveraging the power of research and AI to help you navigate the markets.
And remember, this deep dive was for informational purposes only, not financial advice. Always do your own research and make informed decisions.
Happy investing, everyone!